How's everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, we're going to be taking a look at the 2025 Risk Survey from Bank Director. We're also going to be looking at two related articles from Bank Director as well, highlighting the major issue of fraud, which was uncovered in this year's Risk Survey. So let's jump into a couple of the articles right here. Now, I'm not going to go through these articles in detail because I really want to spend the majority of the time going through the risk survey itself. But this is just an article here to kind of whet your appetite, if you will. So this just says 2025 Risk Survey, Cybersecurity Fraud at the Forefront. So Bank Director's 2025 Risk Survey examines how bank leaders are thinking about protecting their bank from hackers and fraudsters, as well as credit, liquidity, regulatory scrutiny, and more. So cybersecurity and fraud are top of mind for bank leaders this year as the industry grapples with rising volumes of fraud attempts and evolving threats. And we'll get into, like I said, we'll get into some of the statistics in a second, but I just want the key findings, which again, we'll also go through in a second, but fighting fraud, protecting the bank from cyber attacks, applying stress test data, regulators focusing on liquidity, strengthening BSA AML compliance, diminishing deposit woes. So some of the main key findings from the report here, which we'll delve into in just a second. But obviously, it says in here, fraud involving artificial intelligence or deepfake media was much less common at 15%. Craig Sanders, a partner with Moss Adams, believes that could increase in the years to come with the widespread cheap availability of generative AI capabilities. AI could already be a factor in more common types of fraud, such as elderly abuse, where scammers can mimic a loved one's voice to get them to send money. Hint, hint, I might have some episodes on these very topics coming out within the next week, so stay tuned for that. Okay, but let's take a look real quick at the other article here. So this is called Stemming the Fraud Epidemic. So this says bank leaders name fraud as a top risk in Bank Director's 2025 Risk Survey. Here's how some financial institutions are tracking this growing problem. So since 21, staff at First Financial Bankshares in Abilene, Texas, have stopped over $22.6 million in fraud. Pretty good. Estimates CEO and Chairman Scott Deucer, if I'm saying that right. The $14 billion bank has done that by training workers to recognize and stop fraud before it happens. Executives also regularly honor frontline workers who catch fraud. First Financial's leadership team got more serious about fraud about 20 years ago when executives realized the bank had loaned $20,000 to a customer who then sent those funds to a scammer. Still, Deucer says he couldn't have predicted just how much fraud would multiply in both volume and type. It's an epidemic today, he says. A number of root causes underlie the explosion of fraud in the banking space, including the rise of cryptocurrency and international criminal organizations that are dedicated to scamming people via phone and text messaging. Bank Director's 2025 Risk Survey finds fraud among bank executives and directors key concerns. 69% report fraud as a top 5 risk, behind cybersecurity at 84%. Moreover, 94% say their bank or its customers have experienced check fraud over the past 18 months. 70% report financial abuse targeting elderly or otherwise vulnerable customers, and 61% have experienced digital payments fraud. So now we have a very good chart here. Has your bank or its customers been directly impacted by any of the following types of fraud over the last 18 months? And we have check fraud, 94% have been impacted. Financial exploitation or elderly vulnerable customers, 70%. Digital payments fraud, 61%. Identity theft, 45%. Account takeover fraud, 43%. Fraud involving artificial intelligence or deepfake media, 15%. And loan fraud at 10%. My guess is that fraud involving artificial intelligence or deepfake media, while at 15%, is going to dramatically increase in the next 5 to 10 years. And then it says here, fraudsters leverage a myriad method myriad methods to trick customers. One common scam starts with a text message initiating contact with the target under the pretense of starting a relationship or recruiting for a job. Over time, the scammer builds trust before asking the victim to fund a phony investment, usually via cryptocurrency. Customers can set up trusted contacts, such as a family member, to receive alerts, and they can choose the level of visibility they want to allow those contacts to have into their affairs. Okay, now let's see. All right, now let's move on to the actual survey itself. So here is the 2025 risk survey. So I want to blow this up here so everybody can see it. And it goes in here. So let's go to the executive summary here real quick. So cybersecurity and fraud are top of mind for bank leaders this year as the industry grapples with rising volumes of fraud attempts and evolving threats. 84% of bank CEOs, senior executives, and directors responding to Bank Director's 2025 risk survey, sponsored by Moss Adams, named cybersecurity as a top risk for their institution, and 69% say the same of fraud. The survey was conducted in January. Almost all respondents, 94%, say that their bank or its customers have been directly affected by check fraud over the past 18 months. Most report experiencing elder financial abuse, 70%, or digital payments fraud at 61%. Fraud involving artificial intelligence or deepfake media was much less common, 15%. Craig Sanders, partner with Adam Moss, believes that could increase in the years to come with the widespread cheap availability of generative AI capabilities. Worries about more traditional risks, such as asset quality, appear less pervasive. In spite of concerns about commercial real estate, particularly the office sector, 72% of respondents say they plan to grow CRE loans in 2025. Just 19% reduced CRE concentrations in the past year. A majority, 68%, plan to increase commercial and industrial lending. But continued high interest rates continue to challenge financial institutions. We identified certain credits which we anticipate marginal or insufficient cash flow due to macroeconomic conditions, wrote the CEO of a small Midwestern bank. While short-term rates have declined, long-term rates continue to climb. So what were some of the key findings here? So we have fighting fraud. So large majority say their bank has implemented ongoing staff education, 86%, and improved training, 82%, to address fraud in 2024. 71% regularly communicate to customers about scams and threats. Small percentages say they have improved internal controls at 42%, or implemented specific customer education on AI, fraud, and deepfake media at 30%. So protecting the bank from cyber attacks, a majority say their institution conducted a tabletop exercise of its cybersecurity incident response plan over the prior 12 months. 70% say their cybersecurity insurance premiums have increased over the past 18 months. Applying stress test data. Almost 3/4 say their bank performs an annual stress test. As a result of their latest stress test, 53% say they adjusted their liquidity plan or policy, 44% adjusted their asset liability management strategy, and 39% adjusted their capital plan policy. Regulators focusing on liquidity. The percentage of bank leaders who cite liquidity management among their top strategic challenges this year fell to 17% from 32% a year ago. Liquidity remains a key focus for regulators, with 62% naming it as an area of heightened attention on their last exam. Strengthening BSA/AML compliance. 31% say their bank saw heightened regulatory attention on Bank Secrecy Act and anti-money laundering compliance in their latest exam, up from 20% last year. Yeah, we could thank TD Bank for that. Over the past 18 months, 46% say their bank has invested in technology to boost its BSA/AML compliance function, and 41% added staff in that area. 42% improved training for frontline employees. And finally, we have diminishing deposit woes. Concern about deposit pricing dramatically fell off over the past year. 37% cited as a strategic challenge over the next 18 months, compared with 64% who said the same in 2024. Most respondents expect core deposits to moderately increase, 56%, or remain stable at 32% in 2025. So again, some pretty significant issues here. So obviously fighting fraud, the biggest thing. Very closely behind it, protecting the bank from cyber attacks, applying stress test data, regulators focusing on liquidity, strengthening BSA and AML compliance, and diminishing deposit woes. So very interesting findings there. I can't say anything super shocking, but I think just the overall amount of fraud has to be, just has to be really concerning. So now we have here risks and strategic challenges. So there's about 18 questions here. I don't know if I'm going to get through all 18 of them, but I'm going to try to go through some of them here with you. So number one says, with respect to your bank, which 5 risk categories are you the most concerned about for 2025? 84%, the highest, cybersecurity. 69% coming in at fraud. 58% said interest rate risk. 55% said regulatory. 51% said credit. Now, I will say this. My guess is that the regulatory concern is going to, definitely diminish over the next year. Now that there's the new administration in, has seemingly really pulled things back from a regulatory perspective, I would expect that to somewhat diminish. Compliance, 43%. Liquidity, 37%. Strategic, 31%. Operational, 23%. And reputational is 6%. Consumer, 3%. Legal, 3%. Environmental climate risk, 3%, should probably be lower than that. I digress. Number 2, what do you see as the 3 most significant challenges for your organization over the next 18 months? 43% said attracting and or retaining talent. Now that one's always up there. 37% deposit pricing. 36% said evolving regulatory or compliance requirements. 25% said CEO and or senior management succession. 20% attracting customers under the age of 40, 20% augmenting staff and technology automation, 17% generating revenue, 17% liquidity management, 17% the inability to keep pace with technological advances in banking. And then, what's interesting here at the bottom here, 16% had declining asset quality, 15% said slowing credit demand. It's kind of funny. I think some of these should be a lot higher. Like, I think attracting customers under the age of 40, deposit pricing, liquidity management, slowing credit demand, declining asset quality, like those things would be my biggest concerns. I mean, attracting and or retaining talent, CEO and senior management succession, that stuff never goes away. That is always and forever there. That stuff never changes. I think deposit pricing is a huge thing. Attracting right customers, especially under the age of 40. And like I said, liquidity management, asset, what am I thinking of? Asset and liability management, declining asset quality, slowing credit management. I mean, these are the things that should be, in my opinion, should be top of mind. So the balance sheet. So number 3, of the following interest rate scenarios, which do you believe is most likely by the end of 2025? So 78% said a slight decrease in federal funds rate, basically 25 to 75 basis points. So that's interesting. We will have to see how that plays out. Has your bank's leadership incorporated multiple interest rate scenarios into its planning for 2025? 81% said yes. That is great. Absolutely. So again, asset and liability management. That's what you want to see. Number 5, does your bank expect to grow loans in any of the following categories in 2025? 72% said commercial real estate. 68% said C&I. 43% said mortgage and home equity loans. 39% said construction and development loans, which is kind of interesting because, definitely seen a little bit of pullback on that as some of the delinquency there, had a tendency to increase over the last, year or so. Which of the following best describes your expectations for how core deposits at your bank will move in 2025? 56% said core deposits will moderately increase, while 32% said core deposits will remain stable. That's pretty interesting. I mean, nobody's basically looking or seeing a massive increase in their deposits. It all basically is, moderate to stable to moderate growth. Number 7, does your bank conduct an annual stress test? 74% said yes, which, seems pretty typical. I would think yes. Number 8, how has your bank used the results of its most recent stress test over the past year? 53% said we've adjusted our liquidity plan and our policy. 44% we've adjusted our asset liability management strategy. And 39% said we've adjusted our capital plan and or policy. So yes, I like it. I think those are all great things as exactly as they should be doing with that report or reports. Number 9, did your bank reduce concentrations in its loan portfolio in any of the following areas in 2024? 65% said my bank has not reduced concentrations in its loan portfolio. 19% said commercial real estate, 12% said construction and development loans. So that's, kind of interesting, but 65% said they did not reduce concentrations at all in their loan portfolio. So mostly probably because of lack of any real delinquent loans or real major credit issues, right? Number 10, has your bank undergone a regulatory exam in the past 18 months? 96% said yes. Number 11, in what areas did your bank see heightened attention from its regulators on its last exam? 62% said liquidity, planning, and strategy. 33% said interest rate sensitivity. 31% said Bank Secrecy Act, anti-money laundering regulations, and 30% said cybersecurity. 28% said capital planning strategy, and 28% said asset quality, while 25% said asset liability management. So again, kind of hitting all of the, I guess, hot button issues, if you will, that you would think that they would hit, interest rate sensitivity, liquidity planning, BSA, AML, cybersecurity, capital planning, asset quality. So all the kind of typical stuff. I don't think any big surprises there. Number 12, over the past 18 months, has your bank made any of the following changes to its BSA AML compliance program? 46% invested in technology to boost the BSA AML function. 42% also improved training for frontline employees, and 41% added BSA AML compliance staff, and 39% improved internal controls. So that's good. Oh, and I would also point out 33% said they enhanced BSL AML reporting to the board. So again, all good stuff. I think, again, as any bank out there should be looking at these things. Cybersecurity fraud. Number 13, has your bank or have its customers been directly impacted by any of the following types of fraud over the past 18 months? I already went over this a little bit earlier, but again, check fraud at 94% is enormous. Financial exploitation of elderly or vulnerable customers, 70%. And then digital payments fraud at 61%. It's kind of crazy that those three are now dwarfing identity theft at 45%, which is crazy. Number 14, what kinds of changes did your bank make to address fraud concerns in 2024? 86% said ongoing staff education about the latest scams and threats. 82% said improved training for bank staff. 71% said regular communication to customers about relevant scams and threats. 42% improved internal controls. So there you go. Number 15, have your bank's cybersecurity insurance premiums increased over the past 18 months? 70% said yes. Number 16, has your bank conducted a tabletop exercise of its cybersecurity incident response plan within the past 12 months? 83% said yes. So, and then these are just some demographics about the survey here, but that's pretty much the gist of it. So some really good information here in the 2024 risk survey, as you would imagine, from Bank Director. Bank Director does a number of these different types of surveys throughout the year. I try to cover all of them as they come out because I always find them to be terrific information. So again, I hope everybody got something out of this today. Obviously, fraud. That's the big takeaway from this report today. So, but if you like this episode, I would wrap up by saying, please like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. I did attach links to both articles and the risk survey in the description down below. Please leave your comments out there. And as always, make sure to check out some of the other content on the channel. And I will see everyone again real soon. Thanks a lot.